everybody, what's up? Today we are back with another stock analysis. So we will be looking into Pfizer today. I think everybody, for the most part, knows what Pfizer is. They are a pharmaceutical giant, spearheaded a lot of the COVID-19 vaccines. They've seen a lot of demand and a lot of decreased demand recently. I believe their stock price has seen a ton of volatility over the past couple of years. We're going to be getting into them, going over the financials, doing a valuation, looking at their chart, going over their earnings, and a little bit more. So if you're interested, make sure to subscribe and make these videos just about every day. And let's get into Pfizer. So starting off with Pfizer, they are a biopharmaceutical company which engages in discovery, development, manufacture, marketing, sales, distribution of biopharmaceutical products worldwide. So a lot of different things. They have a ton of different revenue streams. Their market cap is currently at 150 billion. So this is a huge company. One thing to note, high dividend yield, 6.6%, which if we go into their chart really quick, you can see a little bit of why that is. Their stock price has massively fallen off since the mid part of the COVID-19 pandemic. So basically what that means is during this time, I'm sure they saw so much demand, they increased their revenue or their dividends a lot. And since then, their stock price has only fallen, which means that their yield is now a lot higher. So definitely a cheap stock to purchase if you're looking to get a discount on some high dividends. But either way, moving on, target price is currently at $30 a share. We are at 26 right now, and long-term growth rate is just about 10%. So looking through the company, you can really see their very, very significant fall off. 2022, they almost caught back up to where the market was. They were outperforming for a while all throughout 2021, especially when the largest part of the pandemic was happening. And since then, it has been a very significant downtrend, currently at $26 a share off of a high of right around $60 a share. So not too great there. And one thing to say about this is if you look at the growth summary here, you kind of see why. They are projecting, especially long term, they're projecting almost all negatives across the board. Very slight sales growth. However, that's also coming after a huge decrease in sales this year. So this 1.3% probably won't even make up for that drop, if I had to guess. And free cash flow negative all the way out as far as they can estimate. So overall looks really bad for their estimates. Just to keep it 100% honest, does not look great. Next up, their income statement. So again, all those estimates show decreased sales. So let's see how their sales are actually doing. And right now they are at a recent high. However, you can see 2022, they had an enormous year at well over 100 billion with a B in revenue. And even before that, they were at 81 billion. In 2018, they were at 53. So even just the growth from 2018 is not really anything too crazy, especially considering it's been 6 years. But just looking at the COVID years, they had a huge increase in sales, 2021, 2022, and a massive fall off following that. Looking at their operating income, you could see it is just about where it was pre-COVID. In 2020, we saw it at 9 billion. Currently, it's at 9.8. So there is an increase there. Last year, you could see they really fell off on their operating income. And one other thing to notice here is that their net income is far lower than it was formerly, even before COVID and all of the increased demand. Their net income is at 4.2 billion currently, and that is lower than even over 10 years ago. So not great. Obviously, they did double their numbers from 2023, but overall, that is still not fantastic. Definitely a lot of improvement needs to be seen there, to say the least. So looking at their total shares, they are actually increasing their total share count as of the past 2 years, only very slightly though, so really nothing major there. And they are still overall much lower than they used to be with their total shares, so nothing too crazy to say about it there. Moving on to the balance sheet, we can see they have about 10 billion in cash at the moment, which is perfectly fine. Their assets are much higher than they used to be, which honestly might not be a great thing, just seeing how much lower their net income is. They could start running into some expense issues holding all of these assets and yet making so much less money. That is always a possibility. But overall, their assets have mostly stayed the same since 2023. Looking at their debt, this is where the real very strong issues start. They have just under 70 billion in debt right now compared to their 10 billion in cash, and most of that debt is long term, which is not great. Um, Honestly, 70 billion, 67 billion, whatever it is way too much to have for any company, no matter what. Um, that's going to take even if they put all of their money into paying it off, it's going to take probably a decade, possibly, with just how much there is. And you could also see their cash balance has really started to run low recently. Now, to be fair, $10 billion is $10 billion, no matter which way you look at it. But just compared to how much higher it was in 2022 and 2023, this isn't the greatest position that they're in. Plus, their debt is by far higher than it was then as well, especially compared to 2022. We do see it come down slightly off of their high in the end of 2023, but even still, there is just so much debt here, and they have a lot more short term than they did then. So overall, not fantastic. Definitely a lot of issues with the debt. However, their asset growth is strong. You could see they added 25 billion in assets over the past 2 years, so that is definitely something positive to say about the company. But overall, that debt situation is probably the biggest issue, other than just their decline in profitability. Now, looking at cash flows, we could see they have taken a massive hit to their operating cash flows. Even once again, compared to 2015, 10 years ago, their cash flows are 3 billion off of where it used to be. They have been selling enormous amounts of investments over the past 3 years, selling right around 60 billion in investments, which is honestly kind of shocking. They've also been putting a lot into acquisitions, which is always a good thing, to be fair. So that is something that is definitely positive. You can see they do have a history of putting a lot of money into acquisitions, so it's nothing too out of the ordinary. But overall, we'll have to see if this pays off, because their amount of debt, once again, is very, very large. So hopefully that does pay off. One other thing to note is that their dividend has increased a lot every single year that we can see here. So that is definitely a positive thing about investing in the company. If you want to look at it from the eyes of being undervalued, this is a very good time to buy, because their dividend yield is so high, but their share price is so low. So it is a good time to buy if you are a dividend investor and you believe in the future of the company, which, me personally, I don't really see the financial side of the company doing too well in the short to mid term. I think within the next 5 years, they can definitely turn themselves around with some well placed acquisitions and things like that. But overall, it just does not look too great for the company. Also, once again, we could see that their cash flows are at a 2 year low here, or sorry, not a 2 year low, a nearly 10-year low. Once again, and last year was very, very rough for them, under 5 billion in free cash flow, 8 billion now, which is a significant improvement, but just compared to where they used to be so long ago, this is not great to see once again. Now, going into the ratios, we're going to see a lot of decreased profitability here, which I'm sure will be very obvious once we get into the quarters, which should be showing up right here. So their gross margin has actually seen a very large improvement over the past quarter, which is very surprising. However, just to note on this, it is lower than it was in most of 2023 as well as 2022. So that is still something to pay attention to. Their SGA to sales is significantly higher than it was 2 years ago as well. Operating margin is sitting at 16%, which is a significant improvement from where it was earlier in the year. However, compared to 2 years ago, once again, it is much lower, actually half of what it was. Net margin actually was negative for 2 quarters, which is honestly very bad. Now, one thing you can say is that they are in a turning around period with the company. And now that their stock price is so low, it's a great time to buy. However, I honestly foresee them having a decent amount more pain in the future, just based on those estimates, just based on how much their sales have decreased and their profitability being so decreased. 7% is nowhere near the above 30% that they were at 2 years ago. So just seeing that, it is going to take so much of an investment to get into that. That's kind of predicting higher debt, possibly more aggressive, riskier acquisitions to get more income. So overall, I just don't see it being too good for the company in the future. Other than that, looking at their debt to equity, it is still a fairly low number. However, just that massive, I think it was 67 or $68 billion, just having that hanging over your company is a constant drain on what could otherwise be free cash flow or cash invested into other things. Now, obviously, they use that money to get acquisitions, so hopefully it pays off. But overall, I still think their debt situation is not great. Total debt to equity is at 73%, which is just closer to the border of being an unhealthy amount. But again, just purely based on those numbers, it is fairly rough, to say the least. So, anyways, moving past that, let's get into their recent earnings report, see if we can see anything a bit more positive here. Overall, right now, I'd say the results were fairly mixed, leaning towards the negative side, obviously. Um, and one thing we can see is the preview for their 2024 fiscal year report, which if we look up here, we can see when their next report is. So they are reporting actually tomorrow. So this will definitely be interesting to see. So this is what I will go over is the preview. And then tomorrow, when the results come out, you can compare them to this, see what happened. So you can see their massive list of different products here and what they're expecting to gain from each one. So these numbers will definitely be very important. Options imply a 4.6% move, so there is a decent chance of some decent trading volumes. But overall, unless there's something very large that happens, I don't think we'll see too much of a move just because the company doesn't really have the most volatile stock. But overall, the biggest thing here is that 17.4 billion revenue. If it is lower than that, will not be great. A lot of these drugs estimated revenues, especially the larger ones like Paxlovid recently, just looking into some, I don't know all the names to be honest with you, but I have heard of things like Eliquis and Paxlovid. If they come in significantly under, I think the company will definitely see a fairly significant decrease just because those are kind of, specifically Paxlovid, this is a very large product recently. So if that ends up not being fairly good, it might not be great for the company. But anyway, moving on to their stock chart. And actually, first, I do want to go into their valuation. So let's do that now. So looking at their competitors here, you can see their price to earnings ratio is currently at 35.65. The average is 33.14 and the median is 30.4. So let's put those into the evaluator right here, and we have 33.14 and 30.4. So let's put that in 33.14 and 30.4. So that gives the average PE ratio of 31.77 and a valuation currently of $23 a share. That is based on the PE ratios of all of their most significant competitors. So seeing this, one thing to note is that AbbVie is definitely an outlier here at a PE of 64. But other than that, I think it stays fairly consistent with the sector, or rather competitors as a whole. So I would say this holds up fairly well. So that valuation of 23.51 is slightly undervalued compared to where the stock price is now, which you can take that as a negative sign. Or I should say slightly overvalued currently compared to the fair value sector price of around 23.50. So you can take that as a negative sign. I personally would, just based on how much the company has kind of been underperforming recently. I was honestly expecting their PE to be a lot lower and possibly be significantly undervalued because of how much the stock price has fallen. But seeing that it is still this high compared to their competitors is really not good for the company. So now saying that, let's get into the chart and show what has been happening recently. So they have seen a very far drop from that $61, $62 high, and now they're sitting not very comfortably at $26 a share. So there is a channel that is fairly easy to find here. If we just adjust this a little bit more. Sorry for the messing around with the channel here. But overall, we can see that there has been a fairly long-term channel over the past just about year and a half to 2 years, starting in 2023. They have had multiple bottoms hit off of this support level. So I would consider that a very strong support. This earnings report is very clearly going to be important. It does look like the stock price is kind of dangling right now. If it goes lower, it will break a lot of support, hitting the first support line of this channel. And if it goes lower, it is not going to look good short term for the company and will actually approach that fair value range that I was talking about in my valuation at 23.50. So honestly, if that happens, I may just be a genius. But that is also more of a longer term valuation rather than just a couple weeks. But one thing that will definitely affect that is their earnings from the report coming up. So definitely pay attention to that tomorrow. It does come out in the morning as it shows here. So it will definitely be interesting news. But anyway, that is all I have for Pfizer. Thank you so much for watching. Make sure to subscribe if you haven't, and I will see everybody in the next video.